Welcome to episode 28 of the Wealth Amplifier Podcast. For the first time in probably 2 months or so, we have the gang back together here. So welcome, Pat. Welcome, Aaron.
The world has not ended, has it?
Maybe it has, and we just don't know it. I don't know.
Yeah, it's good to be back. I was holding down the fort on the last couple of interviews, felt very lonely, and now I'm psyched to be back with the three amigos.
Happy to round it out.
And you did an excellent job on those interviews. For those that haven't listened yet, some really high-quality content. So check out episodes 26 and 27.
Appreciate that. Big shoes to fill.
Just so we don't forget, following up on your podcast with Jacob Anel, we have a webinar that's going to be next month. So keep an eye out for some emails with Jake, answering questions, interactive. So we got some good feedback from the podcast, so we wanted to follow it up with a webinar.
Yeah, gonna be first 2 weeks of December, right, Aaron? I think we have a date, but we'll have more information coming out. But I think we're shooting for the 10th for anybody listening before then of December.
That is correct.
Good. So I had notes for the show. Topic 1 I wrote down was the election is over. Now what? So take it away, guys. I'll just sit back.
Easy as that, right?
Yeah. Simple. I mean, the one note I think all three of us share, it seems a little bit like we're in this weirdly euphoric capital market stage. Like things were, especially in equity markets, were near all-time highs before the election, and then they've continued to skyrocket further. It's anecdotally, I've had a bunch of different client conversations where people are referencing their company stock or one-off investments that are not part of our portfolio or whatever. And it's weird. Almost all of the charts from November 5th are like hockey sticks, almost like anecdotally on all kinds of stuff. It's a little weird. I don't know if this is a sustainable environment.
You might want to, refresh the old market minder screen today, because maybe the euphoria is coming to an end. I don't know. Yeah. Today's the first ugly day since the election. We'll see.
It's very true. Today's the day.
Somebody did ask me, have the phones been ringing off the hook? Is it quiet? And it has been pretty quiet, I'd say. I mean, yes, bad day today, a couple choppy days in the last few, but that first, $1,500 point day in the Dow certainly calms financially some nerves. So, people don't generally call us when they just want to complain about, world affairs. It's usually on the financial front. So it has been a little quiet.
Yeah. And speaking of the relief rally, I think there was one, at least in my opinion, pretty universal positive thing out of Election Day, regardless of your politics. And that is it's over. We're not unlike 8 years ago. I don't think there's like a ton of shock. I mean, there are people that are surprised and so on at the margin, but this was certainly an outcome that many people thought might happen. And then unlike 4 years ago, there's no like mass protest of the election, and it was wrong, and all of these things that regardless of your opinions were out there 4 years ago. Now, whether people are happy or not, it's over, and everybody sort of accepted the outcome, I think, from a veracity standpoint.
So what does it all mean now for our world? Tax wise, I think we've got some things we could talk about there. Market wise, interest rates. How do you guys feel?
I mean, I don't know. I guess we'll save like major predictions for our next and final episode and our predictions episode. But I don't know what to think, to be honest with you. It's weird. Like, again, to your point, Matt, we're having a little pullback today, but things are weirdly euphoric, at least in capital market sense. And it's weird. Like, do you take some profits now? Is this set to continue? Like, who are the major benefactors? Because there seems to be a lot right now. Do we have this America First agenda that brings inflation back? Like, there's a lot of questions out there that obviously it's just too early to know, but it's hard to make sense of like what to do with your portfolio. You know what I mean?
There's never a consensus on the entire market, but we had our investment committee meeting with a mega institution, and they say, we're out on small caps. definitely don't own small caps. And then, we see a report the next day, this new regime and where we're going to really favor small caps. So
right.
Sort of to the point.
Yes. No, it was, you're right. I would say 2 of maybe the 4 or 5 biggest firms out there. One was on our committee meeting, and one I was listening to their podcast last weekend. And you might have thought they were living on different planets. One was talking about how more of the same, large cap growth, be focused on tech, all this stuff. And the other one was saying tech's overstretch, is overvalued. This is like the 2000s again. Don't get caught up in the S&P 500, NASDAQ euphoria, own value, own small caps, own international. And it was like literally polar opposites. And these are 2 of the major firms out there. But I think that speaks to, A, nobody really knows what's going to happen. But B, there's a lot of good reason for uncertainty. There are wars raging around the globe. We have a president coming in, hopefully with some market-friendly policy. However, it's a rather unorthodox cabinet, to say the least, that we've seen so far. I don't think the pharma stocks today are really enjoying the choice of Bobby Jr. there. Yep. I just think I don't think volatility is going away. It doesn't mean that the markets have to go down over the course of the next 4 years and so on. But I don't think the euphoria that Pat was alluding to is likely to continue in a straight line, because it almost never does.
Yeah, you're right. I think I'll add one specific example just to give some context as well. And I'm bringing this very specific example up because I have been focused on it because I'm hosting this panel next week on energy and infrastructure investing. So more than usual, I have a little more energy and infrastructure insight jumping around in my mind than I normally would. But interesting anecdote just to paint the picture.
You look very structured as well, and you have energy, so it all just
Thank you. So during the current administration, I guess I should say, under Biden, they passed a few specific acts that were more sort of, let's call, renewable green energy friendly. So if you're an investor, you would have thought green energy and benefactors of that should do really well. In fact, it's been the opposite. Like, they had the Inflation Reduction Act, which was provided all these tax credits and incentives to invest in clean energy. Clean energy has gotten beat up real hard. I think over the last 12 months, it's down about 13% based on an index you can follow for clean energy. While if you want to call traditional energy, oil, gas, are up, they're all up about 30%. So to me, the point is, and I'm actually stealing this from someone else far more intelligent than I am on the sector, is what seems to be the case is not always the case, right? So having a new president based on all this election talk, the idea that they're going to be favorable towards a certain sector or industry or company does not always shake out that way. In fact, sometimes it can be the exact opposite. So just to give a specific example of how that sometimes plays out in real life, for what it's worth.
Yeah, for sure. And I guess maybe shifting gears a little bit from the markets, let's talk about taxes. It seems unlikely that Trump would want the sunsetting or removal of his own tax cuts, which is sort of the position he's in right now, right? They passed a bill when he was president the first time that was set to expire at the end of 2025. So I'd have to think part of the market euphoria is betting that will not happen, and that taxes will go will either stay the same or get lower with a Republican sweep. Anything to the contrary there?
It's hard to be on the other side of that. I think that's going to be the consensus, and it's hard to see why it would go the other way.
Yeah, I mean, I'd agree. I think there's definitely some, of all the things we've talked about and over multiple years at this point, how it affects individual, corporate, and estate tax rates in our country. If a lot of the favorable, pieces of the current legislation remain, that could be part of the euphoria. I'm actually curious, Matt, because you're such a great sort of legislative and political thinker. I think you analyze things. You at least have understanding of the system, I think, better than the average person. So let me ask you kind of ignorantly, like, okay, so Republicans now control the White House, the Senate, and the House, it seems. So, like, how much effort in layman's terms will need to go into prolonging the TCJA, the tax act we're talking about? Not much. Do they really need, like, is that a 100-day push? Like, what's the likelihood?
It's a really good question, and I appreciate the compliment, but I'm very much an amateur, so I'll give my best shot at it. Just because they control all three branches does not mean that they're going to be able to pass necessarily anything super easy. Maybe they will. Unknown, sure. But as it's not like every Republican has the same views. All of them come from different districts with different priorities and different mandates. And a similar, when Obama won in 08 and took over in 09, he had all three branches and a much bigger majority in the Senate, I believe. I think they were at 59 or 60. And he basically had to use most of his political capital to get healthcare passed, even though you would think that was just sort of like the Democrats' big issue. They've been waiting forever for this moment, and they got it done, but it was clunky and it took a while. So the default is, if nothing gets passed, taxes go up. My guess is the Republicans, to Aaron's point, will come together and pass something to avoid that happening. But I don't think it's just like a day one slam dunk. But, I could be wrong. But going back to the original point, if I had to bet, they'll pass something and taxes will not go up the same way they would have if the act expired.
It's good insight. That's what we were hoping for. That's why I pushed it to you, because I think most people don't. They just assume, they see headlines, and it's not exactly how our system works.
And nothing can ever be smooth and easy. And you've already seen a couple ideas floated that I've never really heard about. But Matt, we talked about maybe a week ago. They said, "Hey, we're going to have was it capital gains rates tied to inflation?"
Yep.
So we're going to start getting some new ideas like that, and everyone's got to start digesting. Does that make sense? Is it good? Is it bad?
Right.
What are the intended and unintended consequences? So we might be in a whole new system that we've not even thought about before, and then going to have to figure out how that filters down to us and our clients. Should we be taking more gains, less gains, giving to kids, waiting? There's a lot of unknown, which goes right back to the start of this podcast. Who knows what it's going to be like, but we got to be on our toes.
And I'll just throw it out there that just sort of popped into my head when you were saying it. But, last time when Congress under Trump's administration passed the bill, and I think it was in 2017, the tax cuts were not all that popular if you lived in New Jersey, New York, California, right, these high tax states. A lot of people saw it as sort of a blue state vengeance campaign, where they were, because they could no longer get much of a deduction for their very high state taxes. Well, now this time around, not only did Trump win reasonably decisively by our modern standards, and he didn't win states like New York, New Jersey, California, but he did a heck of a lot better than he did the last two times. And right. I do wonder if that resonates with him, and if he's going to want to be a little more blue state friendly, because he seems to have some friends in those states now. So again, pure speculation. I have no idea, but it is. I do wonder if it's going to look a little different than it did last time.
Yeah, it's TBD, right? But that's a really good point. I think any clients we talk to in those states, myself a resident of one of them now, it's a major hot button issue. So it'll be interesting to see if people get some favorability there.
And now that the election's over, moving on from the markets for a minute, Pat, I'll throw it to you. Any I won't say last minute, we have 6 weeks left of the year, but anything you want to highlight that people should be doing beyond? I know you and Jake highlighted a bunch of stuff on your last podcast, but anything that people should take away from a planning perspective into year end here?
Yeah, sure. So, I think the best thing you can do, just very generally, and maybe this is too general, but take inventory. Take inventory of your plan. What I mean by that is, what were your goals coming in? Did you hit your savings amount? Simple stuff. Did I max out my 401k? Did I max out my HSA? You can check on all those things, and you still, to Matt's point, have 6 weeks to try and hit your bogeys for some of those things. I think a lot, though, really does lie in the tax arena. Regardless of legislation, I think most Americans agree everybody wants to pay less in taxes, at least individually. So you can't do that after the year has passed, even though most people think of, I think, tax planning as a tax filing endeavor. It's really a year-end endeavor, because you can't change anything about your taxes once the year ends. So Now I think is really the time to be looking at some of that stuff. I think get inventory again of your income, where you think you're going to fall on taxes for the year. Work with your advisor, work with your CPA, figure out what kinds of things you can do, whether it's a tax loss harvesting maneuver, looking at your deductions, making charitable contributions, understanding the effects of a Roth conversion. Big one, Aaron and I think all three of us were just talking about, for a lot of executives out there that have deferred compensation. You got big benefit periods coming up, things that will have major effects on your tax picture next year and in future years. So, those are a few. I don't know if we want to dive into any specific ones, but that's all the kind of stuff that's rattling around for me.
No, I think that's good. Look, as we always say, those are more one-on-one conversation topics because they're different for every individual. But I think you highlighted some really good ones there. And Aaron, I think you can elaborate on anything that Pat said, but I think what the public really wants to know is what's going on in Hoagie land. So I didn't know if you want to pivot to your reviews and headlines section.
I've heard the clamoring, so let's do it.
Yes.
All right. We've got one article and then into a much awaited Hoagie review. All right. Wall Street Journal article from today. We're just doing one. Your company pays for your sick days. Should it pay for your pets too? For some bosses, granting paid time off to care for furrier family members is one employee benefit too far. How do you feel?
Wow. Pat, fire away first on that one.
I don't know. I don't know. Look, I love dogs and cats. I love pets, but I don't need employers to pay for my pets. And I don't know. Come on. I don't know. It's a personal choice, right? If you're going to have a dog, it's expensive sometimes. Take him to the vet, him and her to the vet. That's on you. You know what I mean? I don't know. I'm not so sure about that one. And by the way, from a nerdy tax planning angle, because we just segued from that, all these benefits, they fall under often what's called a cafeteria plan, additional benefits that an employer is offering. You have to pay taxes on that, even if it's going directly to something. If let's say you're getting a $10,000 pet stipend, it's money you're paying taxes on, and you might not actually be realizing it or saving it. And sorry, I'm sorry, I keep hitting my microphone and desk, Aaron. I gotta be more mindful of that. Hopefully everyone's not getting a bad recording here.
That's okay.
That's a heck of an article you picked there. And look, I have a dog. My dog's awesome. And I will say, whereas I'm fairly certain that my wife and kids do love me, no one is more excited when I come home at the end of the day than my dog. I mean, he is just fired up. That said, I don't know that pets need to go too far into the corporate benefit land. I hope we don't get a lot of hate mail for this for those that are but I do think you got to draw the line somewhere, right? And I do think in general, though, you may go, it seems like some companies are moving more to the standpoint of less itemization of why you're not in the office, sort of here's a pool of days, do with it what you will, and so my guess is this would fall under that.
That was from our conversation yesterday with some friends of ours about you have unlimited time off, but nobody really takes time off. Right. So it should be more defined. So yeah, I just thought it was interesting.
Yeah, that's a good one. So tell us about the Hoagies.
All right. So I had one teed up from 3 weeks ago, but I had another, and so I'm skipping over the 3 weeks ago and going to a new one. So Timmy D's is in Cheltenham, Burholm golf range. Yeah. Remember that? So down that way. So this is a place I haven't been to, let's say, in 8 or 10 years. It's near where my old house was. Haven't been there in a while. So I remember I liked it, but I didn't really remember, do I love it? Was it okay? So I got a story here, if you couldn't tell. My son has a travel baseball game a couple weeks ago, 60-degree fall day. And my wife says, let's grab some Hoagies before the game. So we drop them off for warm-ups. We go to Timmy D's. We walk in just like I remember it, really nothing on the walls, very bare bones. I order, I don't know, it's called the Godfather, the old fashioned, whatever it is, whatever their staple Italian sandwich is. My wife, to her credit, says, don't you like the, hot peppers on there? I said, yes, give me the hot peppers. They say, you want the hoagie spread? Yes, give me the hoagie spread. So what's interesting here is a lot of places, you're in South Philly or wherever, even at a Wawa, you can see them making your sandwich. Here, they're in the back So I don't know what I'm getting into. I don't know what the role looks like. I don't know, the craftsmanship.
Right.
Is he an artisan? Is he just closing his eyes and throwing things? I've got no idea what I'm getting into, okay? Get the sandwiches. They're all wrapped up. Can't see what we've got. We go to the game. I got my chair ready. We're going to watch the game. It's going to be great. The coach says, Aaron, a bunch of the other coaches bailed. Can you do game changer? That's the thing. You keep track of the balls and strikes for all the parents to see on their phone. Oh, and also we need a first base coach. I'm like, oh my God. So now I'm called into action. I got the call to play or to coach. So I'm like, oh, I'm not even going to be able to eat my sandwich. I'm disappointed. I'm going to be hungry. It'll be a 2-hour game. So I run over to the sideline. I unwrap it. This thing looks awesome. Take a bite. Blown away. So I'm running back and forth between innings, getting a sandwich. Yeah, it was awesome. So, people talk about it's a seeded roll. People talk about how they really like the crunch. It's not so much as a crunch. This is a flaky top with a soft inside. The peppers, the cheese, the oil and vinegar, top to bottom, it was awesome. Even I loved coaching, loved having the sandwich. It all worked together on a nice fall day. So this, I think, goes to the top of my list with a 9.6 for Tease.
Wow, that's the all-time leader.
Yeah, it was awesome.
Wow, I grew up, as you know, not that far from there. I certainly played mini golf at Burholm Park. I've never heard of Timmy D's.
So I think they were a little further, I'm Googling, in the Northeast, and they moved to the current location maybe 12 or 15 years ago. I'm guessing. Something like that.
Okay, so after my time there. All right, I'll have to check it out.
Yeah, Timmy D's. Well, we're actually got another game in the same place. I might go back. I'm going to review it again. Yeah.
But this time you could be like, all right, I'm sorry, I can't coach no matter what because I'm
enjoying the sandwich.
Right. I have a date with the sandwich.
I was living and dying by that story. It's hard to get higher than a 9.6. Do you think that they would be it'd be a better experience if they made the hoagie in front of you? Because clearly they're making it with love.
Yeah, I do like seeing what they're doing. But then again, the surprise, I unwrap it. I'm like bending over. I'm on the grass. I open it up and I look at it. I was blown away. It's like, oh my God, this looks so good.
Maybe they have like performance anxiety. They're like, we make our best work behind the scenes. We can't be, letting the public see everything we're doing.
As opposed to my other favorite, one of the ones in South Philly, it's a show. You're there. It's just a little glass thing. You're watching them. They're taking stuff out of the fridge. They're making it right in front of you. So, very different vibe. Timmy D is not all that aesthetically pleasing of a place inside, but they got the job done.
Wow. All right. Well,
and we're back.
Not on my list. We're back. We are way back.
I mean, that was you came back strong. That was good.
Thank you.
So I think we're up to closing segment. We're right on time this time. No extra rambling. So Pat, you want to lead us off with any thing you're reading, watching, listening to, whatever?
Sure. I'm going to go in a different direction than usual. Anybody who's watching the YouTube video or has had a Zoom conversation with me might have noticed the caterpillar on my upper lip. And it's a different look. And just to give the backstory briefly, for a Halloween party, I went as Gomez Adams, and I felt like I had to really lean into the costume. And then per Matt's actually stellar advice, he was like, well, why don't you do something good with it? Like Movember, which is a men's charitable cause. If you're not familiar, Movember is a excellent charity that does all kinds of fundraising for men's health. So depression, anxiety, suicide awareness, prostate cancer, all this kind of stuff that affects men disproportionately. And so I have decided to maintain the mustache through the month of November. I do have a link if anybody wants to go support and donate. I'll share. It's on my LinkedIn. It's on my Instagram. We'll throw it out maybe in our newsletter this month. But would appreciate any support there. I think it's a great cause, and that's what I'm focusing my efforts on outside of work this month.
Matt?
Well, it's been a long time since I've been on here, so I got a few stored up, but and they're also a little outside of the norm. So first, a couple of just quick sports observations. The Eagles, I mean, that just 6-game winning streak, looking strong. And Pat's buddy Saquon is tearing up the league right now.
Yeah, best player in the NFL, maybe.
And I don't know what happened to their defense. They went from bad to good. They skipped average. I don't even understand. But no, a couple quick things. One podcast I listened to recently, which will be highlighted in our newsletter coming up soon. But I really think this is going to be a growing area in the investment and finance world. So I really like the podcast. But a guy I listen to sometimes, Meb Faber, who runs a firm called Cambria Funds, had a guy that we're friendly with and we know well, Wes Gray from ETF Architect, on to talk about this whole idea of tax deferred 351 exchanges with ETFs. I know it doesn't sound that exciting, but I think it's going to be a really exciting thing. And I thought the two of them did a good job breaking that down. So more to follow on that. We may even have one or two of those guys on next year as guests on our podcast. And then off of business and off of sports, coming up soon, I'm looking forward to on I think it's Netflix, could be on Max, I forget, that a music documentary series that Bill Simmons produces, where they had some, I remember there was one on like Alanis Morissette years ago and whatever, but they have one coming out on a niche area of the music world that I do enjoy, which is Yacht Rock, the sort of late 70s, early 80s California-based slow rock. They have a whole documentary on it, and it was actually amusing. I was reading some of the clips on it. Some of the participants, like Michael McDonald, Christopher Cross, Kenny Loggins, were very like, at this point in their life and career, like enthused by that they've been like, remembered as part of this group of like unorthodox musicians. But there are others that are considered themselves more purists. And I saw an interview of, what's the guy's name? It was a quote from the guy from Steely Dan. His last name is Fagan, I think. But he was asked about being part of Yacht Rock. And he literally like hung up on the reporter and just said F off and clicked. And that was the end. So I guess there's some mixed bags in how people feel about this. But I'm looking forward to watching the documentary.
I'm a big rock doc fan. So, yes, I'll get in on that. I like it.
Yeah.
You stole my thunder. I feel like a sports, the radio call-in guy. You stole my thunder. I was going to say nothing matters except the Eagles. They're storming back after last night's win against the Redskins. So that was
excuse me, Commanders.
Oh, sorry, I apologize. Yeah, my bad. But we were just talking about it, Pat. I stumbled on a short comedy 25-minute kind of deal on Netflix called Detroiters. A lot of fun, very silly. And Pat, the follow-up to that, the show is called with the same comedian.
I think you should leave on Netflix.
Tim Robinson is the comedian. I think he's the main guy. Really funny. If you need something light to lighten the mood, I would recommend Detroiters. And then I think you should leave, which I will certainly check out as well.
Cool.
Yep.
All right.
I like it. Matt, just to leave the audience with some something to look forward to. Do we want you teased a little bit that the big idea that we've been talking about in the firm. Are we going to start talking about that next episode, do you think? Should we tease it all anymore as we close out here?
In and of itself, of what you were saying is the tease. We could just stop right now.
That's right.
We'll just say that the ETF business is an interesting business, and we'll more to follow.
Okay, I like it. I like it a lot.
All right, that's a wrap on episode 28. Looking forward. I believe I'm up next in the interview series. I am interviewing our longtime colleague, Elizabeth Libby Whitaker, and more to follow on that coming up around Thanksgiving time. So thanks for listening. We'll talk to you soon.
Thanks, everyone.
See you guys.